be right in the call in just a second. We're going to take a quick break to thank our sponsors who make this show possible, and then we're coming back to Chris Pulver. Stay tuned.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a Pulver alert.
A Pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Good stuff, everybody. Happy Friday. Trades are plentiful. I actually updated my Pulver alert section in the Discord. We had 3 trades, 3 winners from yesterday. I did a final hour session on YouTube, got a trade in on Apple, took some profit, got a trade in on Amazon, took some profit, had a trade in on TEAM team, took some profit. All those closed out. What else do we have here? I'm going to take a small loss today on Coca-Cola. No big deal. I've got some expirations on Microsoft. Actually, I want to take a look at Microsoft this morning. So let's chat. Got a couple alerts set on Amazon. I'm curious. So what I did on this one, this was actually a butterfly spread yesterday. So the trade was at, I'm trying to think here. We were sitting around 186 yesterday at the close, and we jumped up all the way back up towards $200. So I put in a trade that was a pin at $200, and because it was out of the money, I turned a 13-cent debit into a 50-cent credit. Now, that might not seem exciting, but if you go into 10 contracts, okay, I'm risking $130 to turn this into $500. That's not too shabby, right? So it's a very inexpensive trade to make a few bucks, which is kind of cool. So that was at Amazon. Apple, I did this on 2 trades. And actually, I'm happy that I took the trade this morning because it's sitting right back in between my levels. I looked to see if we got up to like 235 or we got down to 220, and I put the same type of trade on here. This is a butterfly spread, and we went down towards my lower level. I paid 21 cents here and 21 cents here. I think I paid 22 on the call fly, but I closed out for 50 cents or is like 55 cents this morning. So I took both trades off, walked away with a few cents net profit, called it a day. The other one was TEAM. This one is fading a little bit, but I just bought pretty much an at the money bull call spread. The 190 by 192.50 got filled for like $1.20 or $1.25 and ended up grabbing $2.40 credit, almost max profit first thing in the morning versus waiting all the way to today's expiration at the end of the day. So 3 quick trades, 3 quick winners. Obviously, that's great, and more to come. So in the, I know there's the Black Friday sale. I would definitely recommend, if I'm going to be on these sessions every single day, Nick and Frank, Elvin, everybody, I mean, all of us contributing and posting some trades. You want to be a part of that, then it's pretty easy, and offering up the type of discount that we're doing, it's pretty fantastic. So I do know that the link that are shared too, or if you're in my Discord channel, I have a promo link Pulver. Is useful if you have a coupon. There's like a coupon box. You can type in the word Pulver and save yourself a few extra bucks. Okay. All right. Let's chat about everything today. P&L on the day is pretty good, showing about $16,000 in profit. I want to see if I've got some trades. I did do some extra management this week. I did some rolls. Let's see here. JD, I rolled out, trading at 40.79. I rolled out, lowered my cost basis a little bit more. Pfizer at 28.41. I've got my covered calls out to 29, and next week I'm trying to get that called away at 29 bucks. And I think OXY, where's this one at? OXY at 50.34. This covered call is out to next Friday. Let me see what this is trading for right now. Close full. It's still showing 28 to 30 cents on the credit side, so I'm just going to let that decay. Hopefully oil just is stable. I mean, that is actually one of the few stocks that Berkshire Hathaway continues to buy is OXY. So I'm not saying that's why I'm justifying the trade. I'm saying that $50 is a pretty good support level. Oil support seems to be holding for now, but I'm watching that pretty closely. And if I get more aggressive on repairing the trade, I will. But I'm going to try to flip that for a couple $100 in profit. What else do we have here? URA, that's uranium. Walmart is up. That's fine. WBA is off those lows. Tesla, I wouldn't mind taking some ownership of Tesla. This trade is out towards the end of the year, December 20th expiration on that one. Snap is up to 1263. All I have is I took profit on Snap earlier. I bought the shares. I didn't cover anything on Snap. I just closed it out for profit around $12. So I did sacrifice a little bit of upside on that, but I still made like $4,000 this week on Snap, which I'm okay with. What else do we have? That's about it. RCL. Hey now, RCL looking a little bit better. I've got the 207.50 by 205 out to the 15th. I'd like to see some pressure to the downside on RCL. And that's a bear put spread that hopefully gives me some profit. I think I paid, wasn't super expensive. Let me go to RCL. Why doesn't it show me what I paid on that? Well, I guess I can figure it out. I paid $1.15. So $1.15 to make $1.35. And I need price to stay below 205 in 2 weeks. MO had a big pop to the upside this week as well, trading at 54.47. Wow, that's a big fat dividend play. MO, Altria, just one massive move with earnings. I mean, I'm going to lose the stock around $50. I bought it at 39 and 40. I am trying to roll this thing out and just continue to have this be a nice little dividend generator for me. But there's not much I can do to the upside right now outside of let more time pass because I've got these covered calls out to January and March. So that's 2025. Let's have a look top down today. Yep. So let's go SPY. I did add some credit spreads in on SPY and Qs yesterday. So looking at some of the averages we've been talking about here in the sessions, I like the, this is a 21 period exponential moving average, then a 50, then a 100, then a 144, then a 200. So we've had about a 3% pullback from the top, about a 3% pullback from the highs. I actually think this is a healthier look for the market to do this pre-election. That being said, though, jobs numbers today were not that great. I would say that I don't know. I'm curious what the market is thinking. Obviously, I'm always curious what the market's thinking. But if we have a seesaw of, okay, it's inflation versus employment, right? Let's just chat about that for a second. It's inflation versus employment. So we have employment here, and we have inflation here. Now, there's obviously a balance of how this market is interpreting which is more important, because what we saw all year was inflation is most important. And then once we got into the summer months, we started to see that our employment numbers were looking crappier, and all of a sudden, all this started to shift into employment's more important. Fed's talking about cutting rates. We're getting closer to our inflation target. Still not done, but we're getting closer. It's blah blah. I mean, the language shifted so aggressively to say we're focused on employment now. Inflation's going the right direction. And then just these last couple of weeks, it's back to inflation again, because we saw that the Fed cut rates by 50 basis points. They're looking to cut again November, December. And we've seen inflation go from, I mean, I'm looking at that true inflation reading at 1%, now up to 2+%. That's not a good thing. You look at the bond yields ripping to the upside by 60 basis points. That's not a good thing. Okay. Like, this market is saying, idiots, inflation isn't over. Okay. Look at the 30-year mortgage rate, went from 6.09 up to 7%. What the heck? You know, that will continue to crush the housing market. It's already an unaffordable housing market, but it will destroy it. I mean, we are going to see people that won't move out of their homes. We won't see any new inventory unless it's rental only. I mean, the house prices right now, people can't afford to buy it. The median household income, it's going to take 40 to 50% of your median household income in order to afford the average home price. And the rule of thumb by banks to get you approved on things is like 20 to 30%. So it's inflation is not going away. And with the additional 2 cuts coming by the Fed, I don't know what that looks like. But the market is pricing in that things are going to be inflationary moving forward. And then you have non-farm today, and non-farm is another disappointing figure. So all that being said, I don't know. We're right back in this interesting spot where both things matter. I don't know if the Fed can navigate a soft landing when something's going to end up getting like the seesaw is going to end up breaking something. Okay. Plus, we have an election next week. And I would say that like it's no big deal because it's just run of the mill election. But that election for next week could also not come with a full decision election night. Something tells me we might have, states that can't decide or states that can't tally the votes, and there's going to be questions on either side. Doesn't matter if it's a Harris victory or Trump victory. I think either side is going to possibly dispute the results, and I just think that's going to be volatile and choppy and indecisive for the markets, which nobody wants to see. So just potential drama ahead. Be cautious. I'm sitting here with lots and lots of buying power waiting to deploy. Okay. So am I up in the day? Sure. Did I have a good week? Yes. Do I have some buying power ready? Yes. If it melts up higher, fine. For me, again, a 3% pullback in the SPY is not, throw everything at it because that's a pullback I've been waiting for. It's not. Pullbacks for me, it's like I'm talking about 5, 8, 10% pullbacks. Then I start allocating more capital. Not 2, not 3. So this week has been income trades. So we've had some good winners. Overall, I mean, I think I'm not sure what the total is, but probably over 10 to 12 trades. I probably have, let's say I took 10 trades. I probably had 7 or 8 winners this week. I'm happy with that, but just moving the needle. That's my job. All right, let's go top down. If you got some requests, let me know. B polls. Let's get some confetti in there. Let's get some confetti for Pulver alerts. Nice. Okay. So we did have a pullback on the SPY. We're bouncing off this 50 period moving average. I did put in some fresh credit spreads on that level yesterday. I'm still willing to test lower levels if possible. Futures, same thing. We broke the trend line. We're pulling back. Now, I don't know if breaking the trend line necessarily means like, oh, this thing's going down. Fudge, man. I've got an expiration on some of my hedges. I guess I just need to sit on them and not think about it as like I should have taken profit. I have some hedges out there still for next week that if we go lower, I do have a profit trap. Let me show you that trade really quickly here. So I do have a profit trap. It's an ES butterfly. So right here, 1, 2, 3. I believe that's it. Is that it? 3, 3. That's a November. Okay, this should be it. That's 25 and 30. That's so weird. It seems like I should have been skipping more. So that skips okay, so 15 and 30. Okay, so it was proper. It was a proper broken wing butterfly. So if I analyze this chart, can everybody see this? So this is real price right down here with this little flag. That's real price, this little flag that's floating around. So I'm in profit right now, and this is around $1,000 of profit. And so if price stays where it is, goes down further, or actually comes all the way up towards like 58.90, I still have $1,000 of profit. Okay. If price comes up to 58.85 or 58.90 by next Friday, this pays me about $3,500 of profit. So that is a hedge that is very cost effective. I've got some, good income there if I'm right and price just stays where it is or goes lower. But if there's a chance that price is trying to get back to these recent highs, 58.90 is quite a ways up in the market. So I mean, we'd be like really trying to sniff out all-time highs again by next Friday. And part of me for hedging sake, and this trade being a winner, I'm hoping that this is actually going to be, I'd like $1,000. Yeah, that's good. I'd obviously love a profit trap, which is even better. So just a couple trades like that are still running. So we'll see if this is a break retest. Amazon's pinned at 200. Let me see what that's looking like really quickly. Chart alarm's going off right now. Trade. We go Amazon. So that 50 cents. Holy fudge, man. So that butterfly that I took on Amazon is now trading for $1. I mean, again, this is a pretty good trade. I'm just going to throw this out there. If anybody didn't see the alert from my Amazon trade from yesterday, it is trading for like a 9x return. So a 13-cent debit, you can close it out for $1 right now. So $1, you make 87 cents on a 13-cent debit. That's a 670% gain on Amazon. Not too shabby. So that's just because it hit the pin price and it was out of the money in the first place. That's a good trade. Apple, I don't think Apple's in a good spot right now because it's right in between, but Amazon is pretty perfect. Okay, let's go. Let's keep going top down. Qs. Added in some credit spreads on the Qs yesterday. We're still not at the all-time highs. If we get a late year rally, that typical November, December seasonality, which tends to be bullish, the stretch from November to December to January is usually the most bullish window in the market. So if that happens to be 2024 and we get another bullish run, I do wonder if the Qs can get back to all-time highs and hit 503, 504. Okay. So I did put some credit spreads in there. Nasdaq futures, same thing. We had a 2-day sell-off, came down to that 50-period moving average. There's still a lot of dynamic support in here. Is this the support? Is this the bottom? I don't think so. I think we have a bunch of noise. Look at this. Look at this top. Look at this bottom. I can see price staying inside of here until we have some more clarity on the election. And the election is just going to be, the market just needs to get out of the way. I don't think the market really cares who is president. I don't think that the market really cares about anything other than hopefully justifying going higher if these earnings or consensus are positive, or going higher just because typical seasonality and traders are, extremely bullish. But nobody knows, right? But I would say that if we have a high to low and we trade inside that range for the next week, it wouldn't surprise me. And we just go high, low, and then where do we finish for the week? So this is the last 2 days of trading with a big high, low move. If we finish right in the middle, and then next week we open up and everything is very indecisive. Okay. In fact, Monday is going to be an interesting day because Tuesday is election night. So for anybody that's in my daily profit play, Monday could be a really good day because if it's really choppy and really quiet, Monday could be like a perfect day. And then Tuesday to Friday, who knows? We're going to have more earnings next week. There's over 1,000 companies reported earnings. We got front and center election on Tuesday. You have the Fed on Thursday. So it's a pretty jam-packed week with data, not to mention a new month. Okay, so we'll see what happens. The Dow, I wish I would have put in a little credit spread on the DIA. This one's down about 3%, pulled back to the 50 period. I didn't get in the trade. I'm trying to get in lower if possible. I'll buy this thing lower, add in some credit spreads, but no exposure on that one for right now. Russell, kind of the same situation. We've got a high and a low. We're doing a lot of chopping here, indecisive. One nice winner on the small caps would be if we see small caps that can rally to all-time highs. Okay, all-time highs. That would give the Russell the opportunity to outperform the S&P and the Nasdaq if the recent highs are broken and all-time highs are achieved. Now, I don't know if that's at the end of the year. I don't know if this is going to be a disappointment because rates will be coming down, but bigger financing terms that we're seeing out there, like mortgages and corporate debt and restructuring, all these things are coming to a head in the next 1 or 2 years. So there's going to be a lot of corporate debt that needs to be refinanced in 2025 and 2026. And again, that could be kicked down the road, and that's not a reality right now. But that is something that's going to matter in the next probably 1 to 2 years. The VIX is down slightly. It's down 8%. That's a big difference from yesterday when it was up. This was the heat map from yesterday, so blood in the water. And it was led by large cap tech, which obviously is why we had a big sell-off day yesterday. But VIX is down today, which means prices have gone higher, which they did. They gapped up, and they've been pushing higher all morning. Dollar index. Okay, this is why I haven't called a direction on the dollar yet. I think the dollar index is at a point that we're going to have to make a decision. I saw Nick posted something about this earlier today that the dollar is going to be decisive. Well, it should be, but it might be after the election and the Fed next week. I don't know if the dollar has another launch higher into these previous resistance levels, and all this is a pause or hesitation, or if this is the swing lower, this is now the topping point, and then the dollar is going to return back to these lows. I still think correlation-wise, if we're going to see higher highs in the markets this year, the dollar probably has to go lower. Okay? But if the dollar doesn't go lower, then perhaps that means struggle bus for equities, and dollar continues to go higher, and it becomes more of a, risk. I don't know if it's risk off necessarily, just more of a safe haven. Not sure. So I'd be watching this level on the dollar. It's starting to get a little bit more decision like. I just want to see what the decision is, which I think is going to be after election, after Fed. Look, I'm okay waiting. If the dollar is clearly going up here, I can grab some of that without having to guess where we're going right now. And if it's going down here, I can grab plenty of that and I don't have to guess where it's going. So I'm going to wait for the dollar to give me some more clarity. Okay. All right. Oil. Oil, nice little push off the lows here. We had 66.90. We had 2 days of kind of, um, I guess, a squeeze. I mean, this was definitely more of the squeeze that we saw with Middle East tensions and everything going on with Israel, Hezbollah, and everything in the Middle East that just continues to escalate. We are making lower highs. I still think this floor is in jeopardy. If it stabilizes and then still has a squeeze up here, that's okay. But I don't know. Just keep an eye on oil. I mean, I'm not doing anything on oil. I don't have any exposure on it. My CL trades are all closed up. But one thing that's going to help this inflation story is lower oil and lower pay at the pump prices for us in the U.S. That's one thing that consumers always pay attention to is what's the price of gas. So if our gas prices are going lower because oil prices are low enough or going lower, then that kind of tames the inflation story. Now I'd say just fix the freaking housing interest rates. It's a joke how much they've gone up. Okay, let's talk gold. So somebody's asking about US 30. I did the Dow. Yeah, I think support is fine. I'm still going to wait for a little bit deeper pullback though. Going into next week, all I see this Dow candle is today is filling the gap from yesterday. So we had a gap. We closed lower. We're pulling back to find that gap. I could see that level getting faded again. I would love to see this. There's my 100. If I can get 100, I'll probably put in a trade there. And anything lower, probably trade one. And then in here, between the 144 and the 200, that'd be a trade two. And those will be set out probably 3 to 6 months. And if those go up, then that's easy profit. Okay. So I'm not saying that this is the bottom. If it is, fine, but that's a shallow 3% pullback. So I'll wait. Okay. Let's talk gold and silver. Gold had a decent pullback day yesterday. I'm still waiting. You can see all my moving averages, 2150. Still waiting. I want to see if gold can pull back before I start adding more exposure. Same thing on gold futures. Same thing on GLD. I want to see a pullback. Silver, we are pulling back. Same thing. Here's the 21 getting hit. I've got dynamic support at the 50, the 100, and I like the backside of this trend line. So if silver heads down a little bit lower, I'll probably add in some SLV and some GLD, or I'm sorry, SLV and SI for either some debit spreads, credit spreads, and or owning shares of SLV. My profit target up here at 35.88. Okay. Bitcoin, well, doesn't look terrible. Bitcoin nearly hit all-time highs. Today's candle looks a little bit more encouraging, up about 1.76%. I have to wonder, couple things. So the day after the election, so that'd be Wednesday, the day after the election, pay attention to the S&P's candle, right? There's an interesting phenomenon. I talked about this yesterday in my YouTube session. I had a guest on with me, and he showed me a couple of charts going back to 1996, the day after the election with the S&P. Look at the daily candle. If it's red, that tends to be about a 2-week trend of red. If it's green, that tends to be a 2-week trend of green. So as far as looking out, past election, Tuesday night to Wednesday, look at the candle on Wednesday. So we have election night Tuesday. Look at the candle on Wednesday. If it's red, we probably have a couple weeks of downside. If it's green, we probably have a couple weeks of upside. That's a pretty good probability going back almost 30 years. And of course, if we have green, then there's your potential late year melt up in November, December. All the option flows, all the Vanna charms, all these great things that happen where November, December, January are historically the most bullish windows in the year. So I'd look for that Wednesday candle. So we can talk more about that next week. Okay. Russ, good question. Russ asking for yen plays on 2025. Russ, I'd say come join Nick and I on the 12th, November 12th. Sign up for that webinar and let's talk about it. So 70K Bitcoin futures. So what I was going to say on the Bitcoin side of things, I don't know if Trump is maybe the better president for Bitcoin as far as how Bitcoin reacts. I'm not saying Trump is a better president at all. I wish that guy would never be president. I mean, it is the closest thing to Idiocracy, the movie, that we have in real life, and it has made our whole political system an absolute joke. So I think it's bad on both sides, and it's even discouraging to think like we're just voting for two terrible candidates. Okay. Anyway, it doesn't matter. But what I'm saying is, I know that Trump has been more vocal about Bitcoin and been more vocal about, bringing in miners and energy plays where, he's pandering to the Bitcoin crowd, which could be a big like fence voter, right? But if Bitcoin benefits from, Trump presidency more so than Harris, I don't know. But both have pandered. There's going to be additional. I mean, look, when you got BlackRock in the ring that's talking about crypto and they've securitized with ETFs, I mean, it's Bitcoin isn't the same. But since it's been securitized and we now have ETFs, we've got major inflows in this stuff. It is helping. And if you throw on IBIT, you throw options approval, which they have it from the SEC. We're still waiting to see when and if it comes on OCC and CFTC. I would not be surprised if by the end of this year or going into the first part of 2025 that we have IBIT trading in options, which would be great. I mean, I have shares. I've been dollar cost averaging because that's all you can do. But the ability to trade options on this changes it a lot. You could be, I mean, there's tons of income opportunities here if you can trade options. And also with the cost of shares that I own, man, I can use options very creatively to lower my cost basis and increase my profit potential. So I'm hoping that by 2025 this is approved. So anyway, that's my exposure. Chart alarm set at 73,882 just to get above the highs. We'll see if we tackle that level. Yes, no, maybe. Otherwise we have some pretty good dynamic support. We got out of this chop for a while. This is a big accumulation period. We are making higher highs and higher lows. So I would say that this does look pretty encouraging to break all-time highs and still go higher. I have a symmetry move that's measured out towards 107, all the way up here, 107 to 108. So as I'm holding my Bitcoin positions now, and the maximalists out there would say like never sell your Bitcoin. But as a trader and the exposure that I do have, I would be looking to take some profit and then reallocate because that would be probably a 7 or 8% gain in my portfolio from that 3% exposure that I have. And I'll reset it back to 3 to 5%, and I'll keep it pretty consistent. But that's my measured move. If we get up to 106, 107, then I'm going to start looking to see, is it diversion? Is price and momentum still in agreement or disagreement before I start looking to take some profit? Okay. All right. MicroStrategy had earnings and they missed on top and bottom estimates. That was earlier this week, right? Yeah, that was the 30th. But MicroStrategy has pretty much become this stock proxy for Bitcoin as well, and it's actually been leading the way, which has been interesting. MicroStrategy has had this run that's outperformed Bitcoin, but it's also just as vulnerable. If Bitcoin is down, MicroStrategy drops pretty hard. We've got the stock market turning a little bit lower. Let me show you something here. So I'm watching something on the day. We came right back up to this gap level from yesterday. I would love to see price. I mean, wishful thinking, but today, if price comes back down to the lows, I would love to see this trade get hit around 5,700. I've got potentially a 40 to 1 trade on the SPX that I took this morning. It's a low probability trade, like extremely low probability. But if somehow price gets back to this low and this close from yesterday, there's a monster profit potential right there, which could be fun. So something else to look forward to today. What else do we have? Ethereum, still choppy and sideways. Copper, still waiting. I think China has to get involved for copper. This is actually a pretty good looking setup, though. I wouldn't be surprised on copper if we have the following. Big run up. Okay, we had our ABC correction. This looks like a potential bullish pattern in the making that's just accumulating. So left shoulder, head to neckline. Okay, and if it accumulates over here, if there's a nice confirmation, stop loss below, take it back up towards these highs. I mean, does copper get to all-time highs? We'd have to have a good looking global economy for copper to get back to the highs. So I'm not calling the bottom here yet, but I'm watching this area pretty carefully to see how price consolidates. And then if we start going higher, then there's some opportunity to get long copper. Until then, I'll wait. And this China stuff is still, maybe after the election, China speaks up again and tries to lift animal spirits, and China stocks rip and copper gets better. But anyway, that's that. Nikkei is still down. Japanese yen stuff. Yeah, I mean, I've got some ideas for the Japanese yen, but something tells me that the Nikkei and the Japanese yen are going to be stuck between these July highs and this August low. And traders are going to be in here just getting the snot beat out of them with all this chopping and decision, where this is the level that I'd be interested in selling and watching for structure to see if we in fact go down to retest these lows. But I do not want to live and breathe in that environment. Now, that being said, let me look at the Japanese yen futures here, because you notice how the Nikkei is choppy. Japanese yen futures is a little bit more decisive. Okay. So I would consider trading Japanese yen futures if we come back down to these lows where we had some intervention. We saw the Japanese yen or the Bank of Japan starting to cut rates, or raise rates rather. That maybe I could get long there and see if that pops back up. We just have a big range to look at. This would be support. This would be resistance. So there's a couple of ideas to have. I just want to see where these levels actually line up. Okay. That's Japanese yen. That's Japanese yen. That's Japanese yen. The DAX found some nice support out the 50-period moving average. Again, could this high be in place? Maybe. So high, low, lower high, lower low. I still like this. It's been very well supported, right? Pretty well supported, pretty well supported. I would still look at the same thing. Are we supporting this? Well, do we get to all-time highs? Maybe. And then the FTSE broke lower. That's UK. So we broke lower, but this was a pretty attractive spot. If you're looking at this from a longer term investment or just getting an opportunity to buy, it's like we've had this 200 moving average holding really nicely. So as a low risk trade, if you're buying the FTSE, stop loss below, does it come back into all this indecision? Does it get back up towards these highs at all? If so, there's a decent reward to risk right there. But it just came back down to test that 200 moving average. Okay, Hensang still sideways. That's Brazil. I got some shares in EWZ. This thing as an emerging market is performing like garbage. Mag 7, 221. Okay, it's fading back down on Apple. Let me see what this one's trading for this morning. So I'm out of the trade on Apple. Let's see here. AAPL. So let me see on my put side what this one's trading for. It's break even. Break even. Huh. Actually, wait. Oh, I'm sorry. This is trading for 75 cents. So Apple, I put on I did two flies. I did a put fly, I did a call fly, and right now the put fly is trading for 75 cents. And I closed out earlier for 55 cents to take some profit. If I was still in the trade managing it, there is a 43 cent of total debit that right now is offering 75 cents of credit. So you can turn one trade into a winner that covers the cost of both trades and walks away with an extra 30 to 40 cents. If this price, by the way, I'm going to monitor this one. If Apple is sitting around 220 by the end of the day, this 75 cents could be trading upwards of like $2. So if you want to hang on and kind of manage that butterfly to, kind of peak profit, then you're doing that later in the day. All right, what else? That's Apple. I still have some shares of Apple covered at $200. This thing, when it ripped way up here, I certainly wish I would have bought some more at that test. That was a wild. Apple's been on a wild ride, by the way. This year's been crazy, right? Apple was down, 18%, and then has one of the biggest rips with all this fake AI. It's like, oh, yeah, Apple's an AI too, and it goes up 44%, becomes number one in the world again. But man, that's a very volatile stock, considering Apple was usually trading right alongside the S&P. So we've had a lot more drama on Apple than before. So I would say this, though. If Apple pulls back into this area, let's say we get 200 again, I'll probably look at some ratio spreads. I'll probably look at something on Apple. Okay, Amazon trading right around that $200 strike. I'm covered up to like 210 on that one, but my puts are going to expire worthless for protection. I didn't need them this week. Google was a bull call spread for profit. Meta still waiting for deeper pullbacks. Microsoft. Let me take a look at Microsoft today. I might put a trade on here. I was talking about this one late yesterday during my final hour session. Let me have a look-see here on Microsoft. I see the euro dollar. Yep, I'll take a look at that for you. So table on Microsoft. Let's say we go out to January of next year. I wouldn't mind owning some shares at 340. I think I'm just going to do a ratio spread. So 340. What do I have running on Microsoft? I think I just have a credit spread or ratio spread already. Let me find out. So I have a bull call spread and a bull put spread. Okay, so this would be a ratio spread. Let me see what that looks like again. That's just a credit spread. So if I did like the 345, let's say I buy the 325 and I sell the 320. 78 cents. Do I love that? Not really. So let me bump these up. Let me go a little bit higher. If I go to a 350, so I buy the 350, sell the 345, that's a little bit better. So that's an income play. Do I like Microsoft enough to own it around 340? Well, the break even on this trade, I would own the shares for the following level. I would have 350. So I'd have 345 as my assignment price minus $1.58. Oops. Minus $1.58. I'd own it at 343 plus I'd have the $5 from the long put. So I'd own it at 338.42. If I own shares at 338.42, current price dropping all the way to 338 would be another 17.8% to the downside. That would be Microsoft pulling back around 27.5% off the all-time highs. It's an income play. I like that spot. I guess it gets a little, I mean, if that spot doesn't work, let me see what the premiums are. They've got to be decent. What is a 30-day covered call going for at the money? Okay, so I mean, I could aggressively lower the cost basis. That wouldn't be a problem. Allocation-wise, if I own 100 shares, that'd be 30,000 cash, 15 margin, plenty of buying power on most of these accounts. So I think I'm going to take the trade. I'd like a little bit more for that ratio spread, but that's not too bad. Okay, here's the trade. I am willing to own the shares of Microsoft. I'm going to put on a ratio spread. Ideally, I don't get assigned at all. This is out to January. If I go January 17th, the probability of assignment is around maybe 10%. Maybe. Okay. So I'm going to see if I can get at least $1.55. I'll try to get $1.60 for this. $1.60. Let's see what this looks like. $1.60 not filling. Let me finesse this a little bit lower. 59, 58. Minimum is going to be $1.55. All right, filled at $1.57. Okay. So $1.57 filled. $1.56 filled. Come on. Like I said, minimum's $1.55, which will probably get filled here. Okay, I'm gonna let that sit. And then one more account. 9151. Okay, those are pending at $1.55. That should fill. I'm going to add that in. So that's going to be an added trade in here to my stock options. This will be Microsoft. That's a 117 expiration. Buy one 350 put. Sell two I'll go buy 1 put at 350. How about that? I'll make this a little bit easier to read. Buy 2 puts at 345. $1.55 credit. Willing to own shares, but only about a 10% chance of assignment. $1.55 income on the credit spread or the ratio spread. If shares are assigned, break-even price is $5. It'd be $6.55 minus the assignment price. So 6.55 minus 345, 338.45. 338.45. All right, I'm just typing this in my Pulver Alert section for stocks and options. So there we go. Okay. So Microsoft. Let's see, did that trade already. Zoom in here, add in the ratio spread. So a 117 expiration, 350 buy put, and a 345 sell put, $1.55 credit. So down here, take a screenshot, get this posted. Here we go. And I still didn't get filled at $1.55. What the heck? I'll let that just sit. I'll let that sit. That's good till canceled. So if I go replace, it's already good till canceled. I'm going to let that hang out. Yep. All right. So $1.55 is my minimum. And that's Microsoft. Anything else that I like for today? Netflix. I have some income trades here. I'm not calling the top on Netflix. Nvidia. There's probably some interested parties of buying dips on Nvidia. I'd like to see a deeper pullback, to be honest. Semiconductors got hit pretty hard yesterday. Here's a 50. Here's a 100. I'd like to see if Nvidia can just stall, maybe come back into the backside of this trend line. So I think anything under 130, I'd probably put in some activity on Nvidia. Otherwise, I've got a lot of credit spreads, naked puts, ratio spreads all the way down here, sub 100, that I'll just take the income on. Let me see where I'm sitting on Nvidia. I know I've had some profit on it without having to own any shares. I'm up about $4,700 without owning anything, which is okay. But I'd like to have a little bit more activity there. Tesla, interested in owning some shares. We took profit on this one with the Pulver Alerts. It was a 225 by 220. Took the profit on that with the earnings play. And then I got right back in near the top at 270 by 265. I'm willing to own shares. This is out to January, so there's no rush on this trade. If we go down to fill this gap, I would probably take the long put off, own the shares, and then start looking at repairing and trying to make. I'm going to try to go after $5 or $10 a share net profit. So I'll turn that into a little bit of an ownership play. All right. Euro dollar I saw. Let's go euro dollar. Saw that request. Look, I come back to the same situation on the dollar. There's nothing to do right now if the dollar index isn't giving you clear direction. I think the dollar index is going to be something we've got to wait for the election next week and the Fed, and then this dollar tells us where it's going by the end of the year. So rather than being a hero trying to get everything perfectly timed, we don't have the timing. I'd rather get in late with the confirmation and probability we're going up, or I'd rather get in late with the probability and confirmation we're going lower. I don't want to call the dollar. So the same thing is true on the dollar, the euro dollar, the Aussie dollar, New Zealand dollar. Look, I like the Aussie dollar and New Zealand dollar a lot. But what do I like about them? I'm hopefully liking some type of support level. So not right now. I'm not buying this thing now, but if we come down to these lows here, like this is a great spot to be long the Aussie dollar. Okay, the New Zealand dollar, same thing. I mean, if it comes into a level that is appealing, I like the spot. So if we get down to 58.60, I'm probably going to take a stab at this and go down 58, 57, and 56. Build small positions, take some tests, and then if I get proven right, then we can add to it and trade this back up into some bigger range. If we go from support to resistance, well, that's a good trade. So I'm looking to see if we are getting the price levels that we want to see. So I'm hoping that we can start buying some New Zealand dollar down there. The other one that I'm interested in the dollar CAD. We're trading at 39.15. I have stacked orders above 4,000. 40.25, 75, 41.50, 4200. They're all just stacked orders. So if they get activated, I think this is a breakout trade that I measured for the last couple of years of range. If we break out, then I'm looking at like 44.50 to 44.90 for profit. And I just want to stack those orders up. So the dollar stuff, I don't have a clear direction on the dollar. I'm willing to wait until after the election next week, after the Fed, see if the dollar gives us any clarity. I still think that in order for the markets to go higher, like these stock market prices, equities have to go higher. If they go higher, dollar should get weaker and equities can go higher. If dollar gets weaker, I would expect gold to still perform well. I'd expect Bitcoin to still perform well. I'd expect, silver to hang in there and perform like gold. For equities to go up, I think the dollar has to go lower. So for today's example of, what's happening with the dollar, it's noise. It's doing this because there's no decision right now. We've had some indecision after this big breakout in that bear trap, and it's just going to make us wait. I think the dollar is unclear. So give it literally like wait a week and see what happens. I think that's better. That's better, but I'm not trading this noise. Okay. It could be. It'll be interesting. That's a good question. Lee says, would a Trump victory be bad for Aussie because of tariffs he put on Chinese? Maybe. But are we going to do it? And is it going to be to that extreme? Are we going to put like just an insanely penal tariff on China? And if we do, look, what do tariffs do? Inflation. Like, come on, dude. I mean, if we put tariffs on, it's inflation. We already have inflation. It's getting worse. It's like second wave is starting to bubble up. We put tariffs on top of that, it's getting worse. Our cost of goods will go up so much. So, I mean, there are pros and cons, and I honestly think like the tariff situation is probably worse for the global economy. It will add so much additional friction. I think that'd be very inflationary. So, I mean, if Trump is making big claims to be like the greatest president ever, then how are we going to fix higher inflation, most unaffordable housing market we've ever seen, to a broken economy, to a K-shaped recovery, to the haves and the have-nots? Like, it's not great. I mean, we've been getting by on what data point shows like, oh, everything's fine. It's like, it's not fine. Things have been a mess since 2020. But there's good trading opportunities. That's one way to look at it. But for just like the average economy, it's not great. I feel like we are fudging these numbers like crazy. Euro dollar, I just talked about it. Dollar index, I don't have any good trade on dollar index. Euro dollar, I would love to see the euro dollar back down here towards like 106. I'm not interested in trading the middle. I think this is a choppy zone. If we come back down to these lows, I'd love to buy some euro dollar down in here, get some major support, and see if this comes back up into the halfway point or back up to the range highs. The only issue I see on the euro dollar fundamentally is that the ECB is cutting rates and the Fed is slowly getting there, but the ECB has been more aggressive. And that, euro economy versus, US economy might be different. So I like the support. If we get support, I wouldn't mind buying euro dollar, but I also wouldn't want to be sitting here holding the darn thing, because if I'm going to buy this thing low, it's going to be at like 96 again, So there's two ways to look at this. Either this euro dollar pulls back for a lower high and then we have a run down to these support levels, or this thing is going to go lower, find support, and then come back up and find some efficiencies. Euro dollar is still one of the most liquid currency pairs in the world, so it's usually pretty efficient. So I don't typically see a lot of big crazy trends without it doing something like finding some pockets and pullbacks and pivots. Okay. All right. Okay. Any other questions for me today for this morning? I've got some 0DT stuff to watch and monitor. P&L's up on the day. Let's go into DTE. So I did get rid of a lot of my 0DTs. I'm going to have some trades that are closing. There it is. So KO, I'm going to add a couple credit spreads. SPY, I've got a 585 that's going to be worthless by today. That's a loser. Apple, closed out the butterflies already. That's fine. Ford, I had a put on. That's going to be worthless. It didn't really help. I only paid like 10 cents for it. SoFi, same thing. I didn't cover anything. I was tempted to cover some shares on SoFi, but I didn't. SPX, I've got that little butterfly today that pays 40 to 1 if I'm spot on with a 5,700 close, which is unlikely. JD, I rolled. Pfizer, I'm trying to get someone called away next week at 29. Pfizer is up 19 grand. Like, come on, man. I did get another like 25 to 30 cents out of that. OXY, same thing. Like, just trying to repair some of these trades, grab a few bucks out of it. Pfizer is going to be a nice one. I'll make like $2,000 or $3,000 per account. OXY is going to be like $500 to $600 per account. And then I'm just going to wait on China. You know, maybe the post-election, we get some animal spirits discussion. We get another like vocal stimulus trade from China. We just revisit those highs we saw back in August, or actually, what was the rip we saw back in China here? So where was it? That move in October. So I was going to say it was September, but it was mostly ripping in September, and September to October, like just crazy fast. But here we are, just like up, down. Do we pause and then have another push to the highs? Hopefully that's the case. Okay, pound dollar. I did take a trade on pound dollar. I'm up around 30 pips right now. So I talked about this earlier in the week. I added into my FOREX section of Pulver alerts. Basically, I'm just using the 200 moving average on the daily time frame. I'm scaling in there, and I'm scaling in here with a stop loss below. So if this pushes higher with a weaker dollar in any capacity, well, that trade I'm going after some pocket profit and then the highs to see if those get retested. So if I'm in at 29 and I get out at 31 or 32, I might at least move stop losses or take partial profit. If I get trade 1, trade 2, and it bounces off this trend line, then I'm going after a few hundred pips net on both trades. Okay, Aussie New Zealand pairs, Euro New Zealand. I mean, there's no, I don't know, nothing. I don't see anything. I like resistance, and that's it. So if I hit resistance, then look for that trade. Right now, it's in the middle. It's, you know, if you want to buy dips, then I suppose this is started at support. So if there's another dip to be had, and then you can buy that dip, that's fine. If you're following shorter time frames. Otherwise, it's just resistance up here, support down here. So sell high, buy low. Okay. All right. I will leave it at that for now. Daily profit play. It's like, I want to put on a trade right now for SPX. Let me see what this is trading for really quickly. I may or may not take this trade. SPX trade here. So currently, got to flip this on the call side. Possibly get this one. That's a 9 delta, 8 delta, 55 cents. Let it go all day. That's probably not what I want to do. 10 wide. What? That's going to be a conflict. All right. Well, I get $1 credit there. 85 cents there. 70 cents there. 58. What would that be on SPX? So 58.05. Ooh, that is potentially, that's the gap fill from yesterday. I don't know. I'm 7 for 7 on this trade this week. I don't really want to force a trade, but I'll probably just wait a little bit longer. All right, never mind. All right, I think I'm going to let you go. Have a great Friday. Have a great weekend. Couple things. Look, A1 Trading, biggest discounts of the year, started today. I'm happy to be a part of the bundle. So if you click on the link, you know, the best thing would be to talk to a team member and just have them walk you through it. There's a lot of different product offers. You've got the A1 Edge Finder Pro, you got the stock box, You got the Pulver alerts. You got trades from Nick and Frank. You got the whole VIP bundle. So if you talk to a team member, have them walk you through it just to give you the breakdown. I do have something to add to it. If you are getting the one-time purchase of like the full pay, so you're doing like the gold VIP bundle that includes my Pulver alert service, I do have a full options course to give you. It is 13 strategies, 11 videos, a full strategy guide PDF. And so if you are purchasing the full-on bundle that includes my Pulver alerts, then I will throw that in there for you. So I'll make sure you get access to that. Okay. What does the gold chart look like over the past 10 years of election times? I don't know. I don't think I can do that in 30 seconds. I mean, if you want to go back to 2020, 2016, 2012, 2008, what's gold done? I don't think gold's going to care other than trying to go higher. I mean, if you ask me, like, gold has been one of the easiest trades all year, and I don't think gold is all of a sudden going to stop. So I'd like a pullback in gold. I think there's some volatility potential next week, but I think gold is probably one of the better assets to be buying dips on. I mean, I think the reality is this investors are looking at this as this is real. Like, the dollar's getting debased, the global money supply keeps getting added to, purchasing power keeps going down, inflation is a thing. So gold has been an inflation hedge. Gold has been an a store of value. And you have, it's interesting, you have like gold and silver and Bitcoin all performing very well this year, actually outperforming the indexes. They're also maintaining major bids by central banks. So even go back 30, 40, 50 years, this is a different environment. We haven't had the type of interest with central banks adding gold to their balance sheets like we have had over the last couple of years. China being one of them, So I just think gold looks good to buy dips. I'm just waiting for dips. Okay, dollar yen. I got nothing on dollar yen. Watch the high from July. Watch the low from August. I don't care about it in between. We'll talk about that more. I've got some bigger plans on the Japanese yen and in the futures market come November 12th. If you sign up for that webinar with Nick and I. Okay. All right, cool. Have a great Friday. And have a great weekend. We'll see you soon. Thanks. Bye.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, Pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.